Yesterday, the Bank of Canada increased its key interest rate by 0.5%. So, as a result, the prime rate that the banks offer will now move from 3.20%, which it was previously, to 3.70%. So, what this means is that anyone with a variable rate mortgage, the rate of their mortgage is now going to go up by 0.5%. Now, the Bank of Canada has already increased the prime rate a couple times this year. And as a result of that, we've seen that the market has shifted a little bit and prices have gone down a little bit. Now, why this could be a problem for anyone who purchased prior is that now appraisal values are starting to come in based on what the current market value is and not what people purchased it for maybe 1 or 2 months ago. So over the last month, we've probably seen about 4 or 5 properties that were appraised at less than the purchase price. And what that resulted in is people having to come up with extra money because their mortgage amounts are now reduced due to the appraisal value of their home. So let's use an example here of someone who purchased for 1.3 million. Now they're doing 20% down payment. So their original mortgage amount based on 1.3 million was $1,040,000. However, their home was only appraised for 1.2 million. Now, the way the banks and lenders work is they will only give you money based on the appraisal value and not the purchase price. So even if you paid more for it, it doesn't matter to them because they're using the appraisal value. So the new mortgage is now 960,000, which is 80% of 1.2 million. So as a result, these people are going to have to come up with an extra $80,000 in order to be able to close on their home. So when this happens and they have to come up with extra money now to close, there's not that many solutions, but there are a couple ways for this to happen. So some people are finding that they have to ask some family for money. For example, an $80,000 is a lot, and there might be someone who can help them. Now, the other solution is to get a second mortgage. So let's say you got a second mortgage for $80,000. Typically, the interest rate is about 12%. So you would have to pay about $800 a month. Now, where it becomes tricky is that technically you're not allowed to get a second mortgage if you're going with a bank or a lender. But what is happening is people are finding family or friends to help them out and show them as giving this gift of $80,000, for example, and then after that, they are able to get a second mortgage once they close on the first mortgage. So there is ways to do it, but it is obviously not very black and white and not very straightforward sometimes. Another thing that we've found is that because the market has been shifting so much, private lenders who were typically on the lower end, these are the cheaper priced private lenders who would normally just do 80% loan to value, have now reduced that to 75%. So usually with private lenders, the higher loan to value, the higher the pricing is. So we have these lenders who, again, are on the cheaper side. The ones who are offering in the 4s and 5s for first mortgages are now only going to do that up to 75% loan to value, which means clients have to put down 25% down payment. So what is the best way to avoid your client getting into one of these situations? The main thing right now is if they can get financing, try to get financing, and then we can order the appraisal as soon as possible. If you're buying right now, it really does depend. If the market goes down more, then people who are closing in 1 or 2 months could still be in this situation. If the market stays the same, it shouldn't have as much effect. And then obviously if the market goes up, it doesn't make any difference. So because people who bought maybe 2 or 3 months ago and had closing so far in advance, if the appraisal was done later on, it's causing a problem.